Welcome to TradeTheNBI.com. This is John. This report is for the 13th of October. And there you have it. We moved below the green line. And what did I tell you below the green line? I mean, obviously, we've been short from a daily standpoint. Ooh, all the way back over here. Clicked one too many times. Hold, please. There we go. 2173 was the first short. We dropped back down to here. We could see that there were going to be some signs of a turn. Right back in here, which started out fairly decent, and then the cyan broke back to the upside, and then literally it was right about here that you ended up with the clear indication that there was going to be continued weakness. Pivoted back forth above it. I mean, the steel can give you short-term signals on that kind of thing, and then when it crossed back over, we've just been in a cross-section until this point. As I pointed out, once we've got the orange in between the cyan and red, it was a clear indication that you could be more active from a short standpoint, and that's exactly what has taken place. Now dipping below the red line, I mean, obviously futures early market are off 15 at this point. No surprise. I mean, we're just getting the Johnny-come-latelys to the idea that there was a short signal in place, and they're just late. That's okay. And we were a little early. Market was in sort of a flat mode. Well, let's go back to that NQ because it's going to be relevant as to equilibrium now. It's below the green line, relatively speaking, so you can see the midpoint right there. A little bit further for the ES. Not a surprise, the Dow is going to be late because this is not the futures, but the regular INDU. It's always good to see the correlation difference. And again, just like I said, looking for that orange split in between. So we should get a nice drop off there below the green line as well. Pretty consistent. Gold, we weren't expecting anything to happen with gold. It was flat and it's staying that way. Bonds, you might get a flight to safety a little bit, but I wouldn't expect a whole lot. We didn't get any crossover action there. Beautiful spread between the cyan and red with the orange right in the middle of it, so that would have to get a major drop of the orange there to dip down, signal any kind of turnaround in that particular spot. USO still holding it fairly decent. We're just about in the beginnings of what potentially would be a new DOC spread right there, but you would need to see the orange breakdown in between spread of the cyan and red. Long-term buyers and the shorts, relatively speaking, between the red and that, and the trigger being the orange, which is a ratio compilation of the distribution factors, and it gets into some complicated math as to what that does, which is why it's been a while before I've put it on there. Once I was able to smooth things out to make it a little bit more clear as to what its function was, along with the short-term buyers, it gives some nice correlations. The euro, 110. We're still not at the bottom side of the range, nor have we even nor if we dip down to the lows from previous range, which is right around 109.8 range. It's possible to get there. It looks like we see a little bit of turnaround right there, but still, look at that. Way below on the red line here with the extreme histogram. And as long as we're below that, we're not looking for any new buyers, nor shakeout suggesting that anyone's going to turn around with this. Could be the beginning of a basing move, but we still have a pretty solid orange in between the red and the cyan. Very clean. Speaking of clean, this is about as clean as it gets. Short signal comes in. Where was that one? Let's see where this most recent intraday short. 2134. Called it all the way to the south side. Not a problem whatsoever. We do see the beginnings of a dip of the orange, but we have not closed below the 7.5. And you get to a point where after about 5 to 6 bars, it completely is ineffective if it hasn't dipped back down below there. So that's currently where that's sitting. We can take a look at the case chart and show that the other day. From the earlier short at 2172, which was matching the daily, we have another one that happened here at the 2153, and there's been no change in that one since, well, now we're down to 2116. So it's been pretty consistent following that. And you'll notice there's been no real breach of the short algo from up above. Dip down, get a little rise back and forth. Probably could even do a Fibonacci on that. Why the heck not? Because you would just take the range. Let's start from the bottom and work our way up, and we can see what the retrace value would be. Well, let's try it the other way because it'll look better, because I think we're probably looking at, a typical 38% return. Yeah, right there. Came right up to it, boom. Anytime the short algo, if you're ever doing these and you come to a base point like that, as long as the short algo dips below the 50%, it's typically where you would expect a return back to. It's usually after the 38 is when you start to then look and say, okay, am I going to get a break up or break down? In this particular case, you didn't have any of the movement below with the orange, and so it was just a malaise. Not a huge factor. Pretty straightforward stuff. Oh, actually, I should shrink that chart back down. Let me put that up real quick. That way you can see the values at the end. It's a little bit large. There we go. How's that? Let's move price down a little bit so it's not in the way of the lines. Nice and clean. There you go. And back to the 5K chart right there. So I would look for a little breakdown continuation here, because there's no change in the spread relationship. So we're all set from that standpoint. Anyway, just keep putting up the charts. This is pretty much in line. It's a little disconcerting. I think it's a bit much to play it all onto the election at this particular point. I think we have to assume that some of this is international concerns and some people pulling off because, at least from outside polling, now this is the differential that we talked about. Falling market would indicate some concern about an HRC win, and we would notice it before we would see anything in the polls. So that will be the anecdotal evidence that we'll be seeing down the road, if that is actually why this is moving the market or if this is more international. Either way, we clearly were on the right side of the move, so no question from that standpoint. As always, though, continue to trade well and look for me on that Skype chat. I'll continue to be putting up details. Talk to you soon.